Hello, Namaskar viewers. I am Sanjeev Pandya welcoming you to this week's episode of the Business Talk with Ajay right here on ITV Gold. The show is brought to you by CPA Services, a professional accounting firm with multiple locations in the state of New Jersey, and they can assist you for the tax matters for your personal corporate taxes as well as bookkeeping, payroll services, virtual CEO, CFO, IRS, audit and whatnot. And more than that, they can also assist you on where to invest your money in one of those plans where you can save your tax liability. Not that you reduce your tax liability, but you can save substantial amount of your tax liability. So all in all, CPA Services is your one stop to get the advice and to get all your tax returns done. They can be reached at 908-380-6876 or visit their website sciencecpaservices.com. With that note, I'd like to welcome Mr. Ajay Kumar, whom you see on the screen. He's with CPA Services, over 25 years of experience, CPA and MBA. Joins us every week to give us extra information, knowledge and guidance on any matter that we discuss in the show. Ajay, welcome to the show.
Thank you, Sanjeev. Thank you for the kind introduction.
You're very welcome. And that's what CPA Services is all about. Now, today's topic that we have picked on is the IRA, but not just IRA. This is called Self-Directed IRA. Why it's called Self-Directed IRA? Because the show is business talk, and in this show we also talk about taxes. So here is the business and taxes combined in this episode, and we try to do that in most of the episode. So Self-Directed IRA has a business angle into it also, that how you can invest money from your own IRA and how does that work. That's what it's all about. So Self-Directed IRA, who directs that IRA, your IRA?
Well, as the name says, Sanjeev, self-directed IRA means you yourself are directing IRA's investment options. And you say, well, that's what I do. But typical IRA invest into stock market, bond, mutual fund. We call them the traditional investment. How about investing into gold coins? You can definitely do bullion stock. You can definitely buy some gold related stocks. But how about the real, tangible asset, gold, silver? How about the real estate? You can always do REITs. You can always buy real estate related stocks on the stock market. But how about if you want to buy a warehouse and rent it out? Can you use the IRA money for it? Not directly. And that concept is called self-directed IRA. It's a concept which is not commonly known. People don't know that they have IRA money, and a lot of times hundreds of thousands of dollars. I mean, IRA, you invest $6,500, $7,000 every year, spent per person. So in a lot of cases, people have significant amount of money sitting in the IRA account, not knowing that they don't have to be dependent on the stock market. They have other options. They can choose to invest money into real estate, into gold, into whatever you choose. Tax liens, you can buy tax liens. I mean, the non-traditional asset investment is allowed through this concept, what we call self-directed IRA.
So self-directed IRA is different than traditional IRA, Roth IRA, stuff like that, where your money is invested into CDs and mutual funds and stuff like that. So in a self-directed IRA, you can directly invest money into any business that you like.
Yes and no. Let's understand the concept. So there are two types of IRA, traditional IRA and Roth IRA. Traditional IRA, you get the tax benefit now and pay the taxes when you take the money out. Roth IRA, you don't take the tax benefit out, but in turn, when you take the money out, principal and the growth, they are not taxable. But self-directed IRA is not a third type of IRA. Self-directed IRA only dictates how you invest traditional IRA or Roth IRA. So there are two types of IRA, traditional IRA and Roth IRA. Instead of investing these either traditional or Roth IRA into the stock market, CD, mutual fund, stocks, option, can you invest this Roth IRA or traditional IRA into real estate, gold, tax lien, tangible, real assets? So for self-directed IRA, you could have this concept used for traditional IRA or Roth IRA. So it's not a yet third type of IRA. It's an investment option, a vehicle that you use to invest your existing IRA money into the assets that you want to invest in.
Okay. All right. So now what are the categories? I'm sure that there are categories that you can invest money out of your IRA.
Absolutely. So IRA money can be used be invested typically in the stocks, option, anything that's publicly available. Real estate investment trust, REITs we call it, gold bullions. But what it cannot be invested, where it cannot be invested into real physical asset, gold, jewelry, silver, tax liens, or real estate, warehouse. Can I buy a warehouse with my real estate portfolio? Can I buy some sort of tangible physical property from my IRA money? That's not allowed in a typical IRA. So the way the concept works, you use an intermediary, Sanjeevi. This intermediary forms an LLC for you, self-directed. So Ajay Kumar's Self-Directed IRA LLC. You pull your money from your retirement account into this LLC.
Correct.
Now this LLC, which you own, decides where this money is invested. But again, remember, this LLC is part of your retirement portfolio. So you cannot be taking benefit out of it. Let's say if you invested into a business, small private business, your typical traditional IRA, Roth IRA, they don't allow you to invest money into private businesses. They don't allow money to be lended.
Yes.
You cannot use your IRA account to loan money to a private business.
Yes.
How do you do it? You create a self-directed IRA account, an LLC that's managed by this intermediary, a third party. You cannot do it yourself. You have to hire an intermediary, a third party who is responsible to furnish to the government that none of this money was used for personal purpose. You have to have a third party certifying on your behalf that they looked at it, they checked it, and none of this money is going to be.
Who could be that third party? CPA, attorney?
There are a lot of private companies.
Acha, okay.
They only do self-directed IRA.
Really?
Typically, accountants or the attorneys wouldn't do it. It's a different portfolio, different concept. They have certain filings that they have to do with the government, with the IRS. So there are special companies. There are a lot of companies. You can search on internet, search on Google that do these self-directed IRA options.
Okay.
Basically, the concept is these companies will come into picture. They'll form an LLC for you. They will pull the money from your retirement, either traditional or Roth. If you have both accounts and you want to pull both, you will need two separate LLC. You will need two separate buckets. You cannot be merging the two buckets. Okay. If you have husband, wife, two accounts, you cannot be merging into same LLC. You will need two separate self-directed IRA, one for husband, one for wife.
Okay. Are there any benefits of this self-directed IRAs?
A lot of benefits. Let's
Really?
say you are not happy with your stock portfolio performance. Now this guy, who you really trust with your life, is willing to give you 14% interest, 15% interest, guaranteed. You pull your money out of your IRA, put into a self-directed IRA vehicle. Now this self-directed IRA LLC can loan money to this guy, get 15% interest. So you are getting guaranteed 15% return.
Correct.
Or if you believe the real estate market is going to be hot, everybody is buying the warehouses, you don't have enough money, but you are sitting on an IRA account which has $300,000. You take this money into a self-directed IRA, use this money as a down payment to buy the real estate, and the rent goes back to the self-directed IRA.
Okay.
You cannot get the temporary benefit out of it. You cannot be taking, let's say the rent is coming $5,000 every month. You cannot be taking some portion for your personal use. It's your retirement account. So even the LLC of bank account has to be used as a separate retirement account only.
Is there a requirement or a time limit that you have to put that $300,000 back into your
There is no
IRA
such
account?
limit.
No such limit.
But the only caveat is if you took 300,000 into this LLC, whatever money was earned with this 300,000, all that money must come to the LLC.
Okay.
When you dissolve this vehicle, all this money needs to go back to the same account, similar account, IRA account. If it came from traditional IRA into the self-directed IRA, and the money grew from 300 to 500,000, this 500,000 goes back to the same traditional self-directed IRA. If this money came from your wife's account, the money must go to the same account.
And then taxes, you have to pay taxes on that?
There is no taxes on this thing.
Okay.
Because this is an intermediary vehicle. The money goes back to the IRA account. If it's your Roth account, there is no taxes because you did not get the tax advantage when you contributed the money.
Correct.
If it's a traditional IRA account, money goes back to the traditional IRA account, and the same tax treatment as you would have had if the money was growing into the traditional IRA account.
So when you withdraw before 59 and a half or something, then you
Same
pay
rule
taxes.
applies.
Okay, same thing.
It's just instead of invest by creating this self-directed IRA LLC, by creating this self-directed IRA vehicle, you just created another option for investment. The account type is not changing. The contribution limits are not changing. The tax formula is not changing. Whatever was taxable is going to be taxable. Whatever is not taxable, Roth IRA is not taxable.
Okay.
By creating this self-directed IRA LLC, you just created a vehicle, intermediary vehicle, to invest your own IRA money into certain assets that you were not allowed earlier.
Okay, so having said that, quickly I have a question or two before we go into the break, is that a third party is managing it, third party is reviewing and everything. So who makes the investment decision? It's a self-directed IRA. So if I'm directing, if I'm investing it, that means I can make investment decisions
You
where
do,
I want to.
absolutely, that's the whole idea.
Okay.
In theory, even when you are investing money into the IRA account, you are the one who's making a decision. You choose if you want to buy the Microsoft share or if you want to buy the S&P 500 or whatever index fund or mutual fund you want to buy. It's your decision. Even in the regular IRA accounts, it's your decision where you invest in the money.
Okay.
Self-directed IRA is still your option. It's only giving you more options to invest money. But please understand, it's a risky vehicle. When you are putting this 5,000, 6,000, it's out of mind, out of sight type of situation. You don't think about it. Over the years, you realize you have $100,000. But when you bring this money, and let's say if you give this money, loan this money out, or invest into a business, and this business fail, then you are putting your retirement account at risk. So you just have to be careful where you invest.
That's what I was going to ask you, what's the risk factor involved? But anyway, you answered that question. With that note, we're going to take a short break. When we come back, we'll continue our conversation on a self-directed IRA. That is the topic of the day in today's The Business Talk with Ajay. Stay tuned. Welcome back to the second half of The Business Talk with Ajay. Today we're discussing self-directed IRA. Before the break, Ajay gave us as much information possible on self-directed IRA. Now, continuing that conversation, the question that I have for you is that Ajay, self-directed IRA is the individual who himself or herself directs their IRA into the investment. We got that part. Now, the question is, how much does it cost? Well, the whole thing, the setup and everything.
It depends on the intermediary, like anything else. How much does it cost to prepare a tax, or how much does it cost to build a house? But typically, you should expect anywhere from $3,000 to $5,000 for this intermediary to set up the LLC for you, to do the annual filing, to do the compliance, to get the checkbook to you. So the whole compliance, and there are some yearly compliance that has to happen. The cost goes down longer you keep the account, meaning the first year cost is high, the last year cost will be high because there are some compliance that has to happen to close the account, to dissolve the account and move the money back. So there is a process around the first year and the last year. So the first year and last year cost will be on the higher side and the other cost will be on the lower side. Typically, we see $3,000 to $5,000 per year type of cost in these type of situations.
Okay, all right. So that's about cost. Restrictions, any restrictions?
A lot of them, you have to be careful. So any investment that gives you direct or indirect benefit is not allowed. For example, you cannot be using this money to buy a personal home. You cannot be living this. You cannot be buying an investment property and start living and pay rent to yourself, because who knows you're paying the fair rent or not. You cannot be having a salary. I invest into my own business and I have a salary around it. You have an investment property, and typically, mostly, the self-directed IRAs are used for real estate investment.
Okay.
That's the most common use. The key here is, though, I have a real estate investment property which I typically invest myself, typically repair, all the repairs are done by myself. Can I pay myself a fair salary or fair fixing? No, not allowed. You cannot be having any repair expenses in your self-directed IRA unless you actually pay them to a third party, and that cannot be your wife or children. Meaning, self-directed IRA, and that's why you need an intermediary to attest that all these transactions were kosher, were clean, and no direct or indirect personal benefit was created by the self-directed IRA.
So it's your money in IRA that you can invest into real estate, you can direct the investment, you can make all the decisions and everything, but there should not be anywhere anything for your personal gain. Nothing should be going in your pocket as a salary, nothing should be going exactly.
So right now you have to see this is a separate structure, your retirement structure.
Yep.
Right now, if you don't create the self-directed IRA, can you take a salary from your IRA account?
No.
Can you invest into your personal home? Can you get a salary? You cannot really have any direct or indirect benefit when the money is sitting on your IRA account. Same thing. So self-directed IRA LLC is just creating a vehicle for you to invest your IRA money into certain physical, tangible assets that you're not allowed in a typical IRA account.
All right. Can you name a few clients in this matter?
Well, there are so many of them, Sanjeevji. Naming a few will not be okay, but I strongly advise our viewers to work with your accountant, work with your CPA, work with your attorneys, do some Google search. Make sure you understand what you're signing up for. Make sure you understand the financial obligations that you're signing up for. Make sure you understand the fee that they will be charging. But naming on our show may not be a good idea.
Okay. All right. So now, you mentioned a few times it's a self-directed IRA, and mainly self-directed IRA's purpose is to invest into real estate. So in a way, it's good that government allows you to use your own money and put in the real estate. That's one way of booming a real estate industry as well, right? Gives you an opportunity, and people could have IRAs into millions of dollars in it also.
Yep.
All right. So having said that, let's bring in now real estate investment angle along with self-directed IRA. What can you shed some more light on it?
So imagine a situation, you have some real estate exposure, you want to buy a real estate, you don't have enough money, but you have enough money sitting in your retirement accounts. You cannot use that money from your retirement accounts to invest into real estate unless you have a self-directed IRA vehicle.
Yep.
In that case, you create this self-directed IRA vehicle, basically find an intermediary who is happy to work with you, understand how much they will charge, have them, you don't create this LLC yourself, have them create the LLC, have them create this structure for you. They will create a bank account for this newly created LLC, newly created vehicle. You tell your retirement company to move money from your retirement account to this new retirement account. This is your retirement account. This is self-directed retirement account. Once the money comes into this new LLC, which is your self-directed IRA account, you get a checkbook around this account and you can start writing check. All the benefits should go back, all the earnings should go back, the return of the principal should go back into this self-directed IRA LLC, and when you close it, the money should go back to the same type of vehicle, traditional or Roth, yours or your wife's, wherever the money came from in this structure.
Okay. And how are the expenses and income on this real estate investment handled? It's same through their intermediary that you have to let everything know
absolutely.
that this is what the rental income is, this is what the maintenance of property is, plus this, minus that, net this, so on and so forth. So the intermediary has to see all this and approve it.
I'm glad you asked. So absolutely, 100%. But the real question is, if I have money earned into this account, how much taxes do I pay? If you own a real estate property and you have rental income coming in, you're expected to pay taxes. As Sanjeevji rightly said, money coming in minus expenses, property tax, depreciation, mortgage interest, whatever their expenses are, net profit you pay taxes. In this LLC, you don't pay any taxes. How? Why? Take a step back. If you earn money into your IRA account right now, do you pay taxes? Yes and no, depending on what type of IRA you have. If you have traditional IRA, you pay taxes when you take the money out. Not right now, not in the year you are earning money. If you have Roth IRA account, you don't pay any taxes because you did not take the tax benefit to begin with. Same concept over here. If your self-directed IRA LLC is coming from traditional account, right now in the year of earning, let's say you invested into the real estate, you made a lot of money into this LLC, how much taxes do I have to pay in the year? Nothing, zero. This money, the total earning stays in the LLC like your IRA account. It goes back once you dissolve the LLC to the same type of account and you follow the typical regular IRA rules for the contribution, distribution and taxation.
Okay, that's really interesting. All right, so that way basically, again, you don't pay any taxes because it's IRA. The money has to go back in there, and whenever you withdraw, whatever the category is, you 59.5 above, under, penalty, no penalty, 15% tax on it. Now, throughout your experience, what is your take on this? How popular is this, and how would you really advise somebody to try to do this?
Well, it's getting more popular than not.
Okay.
It used to be very rare. We did not have many clients using it, but now it's getting more and more popular just because a lot of people are sitting on the money and there is no cash in the market right now. The real estate is booming. The number one use for the self-directed IRA is the real estate investment. So a few things have to go right. First, real estate investment has to be attractive enough compared to the stock market. Second, there can't be other money available. When people don't have spare money, free money available to them, the only money that they have is sitting in their retirement account, and they have their eye on the real estate. When they think the real estate will make more money, that's when this concept comes into fruition. Okay. That's when people start bringing money from the retirement account into a self-directed IRA account to invest into real estate. Again, real estate is the number one use for the self-directed IRA money.
Okay. All right. So now is Science CPA intermediary for this transaction?
No, we don't become the intermediary. We'll be happy to guide you, consult with you, advise you through the tax process, through the tax consequences. We'll be happy to file your taxes, personal tax, business tax, whatever you need. But we don't really act as an intermediary. There are special companies, special certifications that are needed for becoming an intermediary for the IRA account, self-directed IRA. That's why you want to work with your accountant, with your attorney to find a company that they typically work with. And there are a lot of them. If you search on internet, on Google, you'll find tons of them. But again, before you sign up with any company, please make sure what you're signing up for, what your obligations are, how much they will be charging, when they will be charging, and how this whole process is going to work out. So please try to go with a referral.
All right. So now, just to wrap it up, as we have less than 2 minutes to go to, having understood and having heard you from, having heard from you about this self-directed IRA, real estate and everything, it is not for individuals' gain, nothing, individual gains out of nothing. It's their money they invest into real estate. That means, number one thing, they can have the property on their name, correct?
Well, the property has to be in the name of the LLC.
Okay, fine. All right. But Abi, you're the member of the LLC, right? Because it's your LLC. So you're the member of the LLC. That part is done. Now, you buy the property today. 2 years later, you decide to sell the property. You buy it for $1 million. You use your $300,000 for down payment and the other expenses. Now you sell it for $1.5 million, $2 million. You gain that much money. Now, I understand you said that money has to go back into IRA. All that money after the expenses, whatever, it has to go back into IRA. Now, in normal case, when a real estate transaction, you buy it, you sell it, there is a capital gains. Does capital gains angle apply to this, or
No.
It's only IRA?
Only the IRA.
Only IRA.
So let's say if you were buying a stock, you bought the stock for $3, it became $10. Do you pay tax on this money? You don't.
Yes.
Not right now, at least.
Not right now, yes.
When you take the money out, assuming it's a
Correct.
traditional IRA,
Correct.
then you take the money.
Yes.
Same concept. You bought the house for $1 million, it became $2 million. The gain, whatever the gain are after all the expenses, stays in that LLC. If you decide to dissolve this LLC, the money goes back to the IRA account, and the same rule applies, whatever applies to an IRA account when it comes to the taxation.
Okay. All right. So that's interesting. That's really good to know. Okay. With that, anything else you'd like to add in the end?
Just in the end, please be extremely careful. The whole idea behind the retirement account is out of sight, out of mind, meaning you don't see it every day, you don't think about it, and slowly it grows to a point when you can retire comfortably with some social security benefit, some IRA money, some retirement money. So while you are thinking about investing this money actively, be extremely cautious, be extremely careful. You need to diversify your situation. You need to have multiple eggs in this basket. There should be some money on the side that you're not playing with, that you're not thinking about. That's only meant for retirement age. Okay. If you bring this money into this self-directed IRA, then you don't have anything left for that bucket, for that passive bucket. So be extremely careful when it comes to the self-directed IRA.
Okay, very good. And having said that, now the last word is definitely yours. Now October 15th has gone, so all the tax obligations, everything extensions, from April 15th to October 15th, in 6 months, everything is done deal. What would be the advice from you for the taxpayer to be careful next year when they file 2024 tax returns?
I'm glad you asked. So between October 15th and December 31st is the most crucial time for a taxpayer. And you ask why. Most people think it's January 1st to April 15th. But that's the time when you file taxes. All tax planning, all strategic planning has to happen now between October 15th till December 31st. We have number of clients coming to us, how do I save taxes? And we politely tell them it's too late for the last year. You can do a lot of things. You can do 401k, you can do solo 401k, you can do a lot of planning around it. You can do defined benefit plan, defined contribution. There are a lot of planning that you can do. If you're on a cash basis, you can buy some more machinery, buy some more inventory, create some expenses, pay some advance rent. There are a lot of things that you can do, but prior to December 31st.
There you go. And that's why you need to contact Science CPA Services for that. They can be reached at 908-380-6876. And if I haven't mentioned it yet, I am mentioning it right now. Their experienced and knowledgeable on-hand CPAs will guide you in the right direction, will tell you exactly, if you have a children, how old are they and their children fund, and where you can invest money for their college fund. Again, this is all to reduce your tax liability, because Science CPA Services believes in doing your taxes right. So give them a call, 908-380-6876. Visit their website, sciencecpaservices.com. And when you do, just tell them you heard it, you saw it on ITV, and that's why you were there to see AJ, and AJ will personally meet you there also. That can also be possible, right, AJ?
Absolutely, sir.
All right.
Absolutely.
Thank you so very much, AJ, for your time and the guidance. As usual, we will bring next week another topic for you, same place, same time. Till then, I am Sanjeev Pandya, wishing you all happy and the smiley days ahead. So long.
Thank you.